Hey, what is up, everyone? Welcome to Market Psychology 101, where we look for value in the markets when there's fear and are cautious when there's greed. In today's video, we're going to be taking a look at the markets, the earnings reports, as well as the Magnificent Seven stocks. So, starting out with fear and greed, how things are looking this week, we're still in extreme green on the CNN index, which is 75 and above. And on pie vesting, which I like a little bit more, we're in the upper ranges of the greed area. And why wouldn't we be? We are in all-time high region on the S&P, the Dow. So taking a look at the VIX, which is the volatility of the markets, you can see volatility is still low. It is trending up. And we haven't been this low historically since right before, let me get rid of this here, right before the COVID crash. So maybe we're coiling up, getting ready to spike up in the VIX as soon as they cut rates, and that can be a bad signal for the markets. I'll get to that in a second. The volatility of the markets divided by the volatility of the volatility shows that we are trending upwards. The reason this is important, if you're looking to somewhat time markets overall, when this spikes, if you do it this way, when this spikes, that tends to be a low in the S&P and the indexes, and probably a low in many of the stocks you look at. When it's down here, those tend to be high. So we'll see what sort of action we get down here. Maybe we just keep in this little sort of accumulation zone down here. But when we get up here, those can lead to good opportunities to buy. Something to keep an eye on, the US 10-year divided by the 2-year. When this uninverts, this is the yield curve inversion. So I'm going to try to simplify this. I'm going to dumb it down as much as possible. That's my goal here on this channel. The bonds, when they've raised rates higher for longer, what that does is it inverts the yield curve. When they cut rates, or as they're getting close to cutting rates, that typically uninverts it. From the time of uninversion, at least for the last two recessions, and that's where we cross the zero line, we have about 22 months until the next low in the markets. So, and I have that shown right here. That white line, that was just a spike in inflation here. This was the first rate cut. When they cut rates, this was the first rate cut after they held it higher for longer. When they cut rates, you see a bottom comes later. From the time the yield curve inverts, which is very close to these rate cuts as well, it's about 20 to 22 months in there. I take the data from the recessions here to be more applicable to the conditions of today, to say that of, things that happened in the 70s and 80s. Not that that isn't somewhat comparable. You can see when we had these inflation spikes in the 70s into the 80s that marked relative market lows. Should we get another inflation spike? Well, that's the big question. The Fed is trying to keep rates higher for longer so we don't get a bigger spike in inflation. And what that does is eventually forces the economy into a recession. I know they are talking about a soft landing. That's still well down the road to see if they've achieved that. I don't believe they have. Something else to know about is that a lot of the major banks this month are going to have to start paying back this Fed program, this loan that they were given, when many were upside down on their bonds. What happened was, and I'll move on from here in a second into the stocks. What happened was, because the bond prices went so low, a lot of the banks, they ended up owing money on the bonds and were negative. And if you remember, the Silicon Valley Bank is a big part of the reason why they went under. So are the banks going to, are these banks that are still upside down, that have had a year to pay off their debts, are they going to be in a better position, or might we see some bank closures start to ramp up after March? I don't know. Maybe the program worked, but something to keep an eye on or in the back of your mind. Let's get into earnings. So earnings, let's get to a better list. Here we go. Earnings this week. Any important ones stand out? We talked about Berkshire last week, but heck, let's take a look at it for this week to see how it's doing. Hathaway will go on the weekly. I have my buy sell indicator on here. As you can see, this thing's just straight up bullish. RSI is higher. It's green. And guys, if you're looking for good times to buy, at the very least, what I like to do is have on a buy sell signal indicator. There's this indicator right here, the 1020 MA. There's more of a lagging indicator called UT bot alerts. It's more of a confirming indicator. And if you want to be very patient, you can even just put it on the monthly and check whatever handful of stocks you like once a week. And if it's green, boom, you can dollar cost average in. That's a very simplified way of investing and take the stress out. Does it mean you're always going to buy the bottoms? No. You could have bought the monthlies in here and then seen a big dip here in 2020. However, overall, you would have bought here at 200 and seen your money double. So just something to consider. No need to throw on moving averages or other sorts of charts for this one. I'm sure the bubble indicator is maybe moving up a little bit, but not the time to buy, in my personal opinion. When we're at a yearly high and we are stretched out away from the moving averages, if you have this stock, great, good for you. But it's doing well, so congrats on that. Let's take a look at Zoom, and I'll end with going into the Magnificent Seven stocks as well. Sorry, here, let's see. Oh, ZM. I was wondering what the ticker was. Zoom. So big COVID tech stock. When we dipped in COVID, where was that? That was like March of 2020. After we had all that money printing, Zoom, PayPal, there are a couple of stocks that really ran high. Could we get there again? I don't know, maybe. It has a market cap of around 21, 22 billion. We got as high as near 600, and right now we're at 70. So let's zoom in even a little bit more. We did just get a weekly buy signal, and as you can see, we're accumulating in here. If I throw it on the monthly, you can see we had a monthly buy signal. So if you like Zoom, if you use Zoom, long term, I don't think this is the worst time to buy a stock. Obviously, this is just a technical overview. Something I encourage all of you to do when you take a look at what companies to buy. Do more than just look at the technicals. Take a look at their balance sheet. What's their revenue, their earnings, what's their expenditures? Are they positive in their holdings? Are they negative? Do they have a lot of extra cash on the side? If Zoom is a company you believe can be around in 10, 20 years, maybe you take a shot at Zoom here. So, yeah, Zoom, I'd say a pretty good spot to buy. Any others in here? We looked at iRobot, that one overall. People are thinking that one might go bankrupt. I feel sad for my robot vacuum. I named him Baracko Roomba, so F in the chat for him. Let's take a look at AutoZone and Lowe's. AutoZone, good company. I don't see that one ever being one that'll close. Again, that's why you take a look at their balance sheet, because sometimes they can reveal reasons why they can. So this is just on the monthly, and as you can see on this 10 MA, we just stay above it mostly. Anytime we get underneath it, that tends to be a decent time to buy. And if you would have bought one of these last two monthly signals, you would have made a decent profit. So this looks like a good long-term stock, 24% move up since the last buy signal. And yeah, this looks like a strong stock. Kind of reminds me of some of the Magnificent Seven stocks, where when it gets under the 50 RSI, tends to be a good time to buy. Excuse me. Drinking some tea. I'm feeling better. Been sick all week. I like to let the sell-off moves play out and then get in on some of the next buy signals if it's something I believe in. Let's take a look at Lowe's. Now, me personally, shop both at Lowe's and Home Depot. I have better experiences at Home Depot. I've had frustrating experiences at Lowe's, so I like Home Depot more personally as a stock, but maybe you like Lowe's more, that's fine. And here on the monthly, you can see, man, we're going up. Haven't hit all-time highs yet, which we hit in December of 21. So this one ran up a bit, probably kind of similar to the reasons Home Depot did and PayPal. Some of these stocks ran up really hard after all that trillions of dollars was printed out of thin air. So getting back to those levels does look like a strong stock. Something that I just kind of keep an eye on is we have this general trend going this way. And I do wonder if we ever were to get a correction, could we get back down to those trends? An indicator I like to watch on the weekly is the 200-week moving average. And for some of the stronger stocks, when you tag the 200-week or get near it, that tends to be a good time to buy. So extended from the 200-week, if we got closer to it, I would feel stronger about buying lows. $141 billion market cap. Good company. It looks strong here. Sure the balance sheet would confirm that too, just by the steady growth you see in the lows. Let's see, what else can we take a look at? Any others? Best Buy, maybe. I'm curious about Best Buy. Yeah, let's finish with Best Buy and then we'll get into the Mag 7 stocks. This is just my bias, but I would guess Best Buy wouldn't be doing as good, but we'll see. So Best Buy, we're at levels that it was in really in 2018. And if we throw on our, I'm curious about the 200 week. So look at that. It's tagging the 200 week. Maybe it'll get rejected like it has before. But like I said, that 200 week can be a pretty strong area to buy for stronger stocks. For weaker stocks, obviously it's going to spend more time underneath. Now you might take a look at this and say, well, if it does bounce down, I'll buy up some Best Buy. Sure. But you have to be forward thinking about Best Buy. Is it a company you believe is going to be around in 10, 20 years? I think with the emergence of Amazon and other companies, I don't know. My optimism about Best Buy isn't as strong as it used to be. So maybe this can be a good value area if they hang on and survive. But yeah, some of these stores, me personally, I don't feel as strong about. But then again, here at Market Psychology, excuse me, I want you to take a contrarian look at what your bias is and try to remove your bias. Take a look at the positives as well as the negatives, and something you could say right off the bat as well. It's at a good historic price, and maybe it's not the worst time the dollar cost average in. Maybe the balance sheet is good. I don't know. So if you have some positive views on Best Buy, then maybe here it's not the worst spot the dollar cost average in. Me personally, even if I did love Best Buy, I'd wait for a sell signal play out and then a buy signal, at least on the weekly. As you can see, we had the strong move up, but when we get these strong moves up and spikes up, as you can tell, we'll have some sell-offs. At least that's what's happened recently. So maybe we get a sell-off, come back down to this $70 range. Excuse me. I'm sorry. I promise I'm feeling better. So we'll fly through the Mag 7 stocks and then we'll end there so I don't die here. NVIDIA, what else is new? NVIDIA keeps flying. I was lucky enough to get some NVIDIA down here. Is too good of a deal. And, this is all these stocks, they're going to be super extended. Probably not a buy signal in a while. And if we take a look at the 200 week, yeah, that's why I bought NVIDIA back there, because it's near the 200 week. And feeling pretty good about that. Now, I like to buy and hold stocks for a long time. This is one where if you get a really good stock, you might see it double about every year or so. That's a great stock if it doubles every year or so. When it goes about 8, 9, 10x in the span of 2 years, I'd say you might want to consider possibly selling and taking some profits. I'm just drinking some tea so I don't die. Because you look at how extended we are above the 200 week. Have we been this extended before? I mean, let's take a percentage look at this. We'll try to line it up. So here, about 300% above the 200 week. And here, that's funny. It's only 350%. I guess it's just more relative to where the price used to be, but definitely in a bubble. Could it go higher? I believe it could. I'm eyeing that 1,000 level, so we're only 50% higher. Even though by size, I guess, let's put it on log. There we go. Yeah, log kind of simplifies it out a little bit. I think just the 1,000 level is going to be important for NVIDIA. It's a big psychological level. I would be hard pressed not to sell if it got above those levels, but it depends when. If we chopped around at 800 for a year or so and got up to 1,000 a year or two down the road, maybe I'd just hold on to it. But if this thing just starts going parabolic again, we'll see. You can see after we spiked up here, this was the end of July, so August to January, so about 5-ish months that we went sideways. Maybe we're going to go sideways for 5 months and then spike up. Let's go to Microsoft. Again, way above its moving average. This is the top stock in the world by market cap, $3 trillion. I like Microsoft, as I do think it's probably the best stock there is to buy. So anytime it gets to the 200-week moving average, you can take a look at the RSI. When the RSI is getting oversold here below the 50, tends to be stronger times to buy. Yeah, it doesn't really hit the 200-week moving average ever. Maybe since the last great financial crisis. Oh, there we go. Yeah, look how far back we had to go. And it was, since the great financial crisis. Man, look at what happened to Microsoft. Imagine if you got it down in these areas for 16, 17. And these would have been good areas to buy too. But really, since the great financial crisis, we've not even touched it. So the areas you could look at buying are on the RSI when we're dipped below 50 on the weekly. Okay, if we go to the monthly, what do we see here? Yeah, you can see same thing below the 50. We recently were below the 50. Again, this is where I bought some stocks late 22 is October there. It was a hard time not to buy. So if we ever get back down to those ranges, I'd say it's not the worst time to pile in. And don't throw all your money at it all at once, because you never know if we had a great financial crisis, 40, 50, 60% correction. Not saying we will, but if we did and we get oversold, you'd want to buy in more on the top stock in the world. So let's move on to Apple. Same thing with the 200 moving average. You can see here since the dot-com bubble, great financial crisis, and only tagged it close in 2016, 2018. If we zoom in, you can see there's some recent weakness here in Apple. So this one we could throw in our buy-sell signal indicator. We've had some weekly sell signals. Have we had monthly sell signals? Oh yeah, we've had a couple monthly sell signals. So Apple possibly showing some cracks here that maybe it'll come back down to around these 150 levels. We'll see. I mean, I just have this fib drawn up from right here. If we did move it to these lows back here, then I'd say maybe you could start taking a look at getting Apple around this 170 range. If we throw in some other moving averages, let's see, the 50, 100, 200. Yeah, you can see here we're getting underneath those moving averages, all of them. Let's throw on another moving average indicator. This one, it's way more busy. Okay, yeah, look at that. We're at the 55 there. The next ones are the 100 and the 200. So Apple bouncing off the 55. If it did get below to that 100, then that could be an area to buy. And that's, by the time it gets there, this moving average might be touching that fib. So around the 170 range. I would not blame anyone for dollar cost averaging into Apple around this 170 range, especially since we had a low here as well. If it got below that, then man, you're looking a lot lower, maybe around 150. Let's move on to Amazon. Amazon's a stock I really like for the future. I think this one's going to be doing well for a long time. So Amazon above its moving averages. Where would the 200 week moving average be? Oh, well, that's exactly where the 200 was on the other one. I'm sorry, guys. As you can see, I'm still mentally recovering. Probably a facepalm moment on your end of the screen. And so, yeah, if we ever got back down to around this 123, cool. You can see here in late 22, man, we got well underneath it. We were close to getting under 80. But yeah, this whole time, not a bad time to buy some Amazon stocks. Google, okay, Google here. Let's throw on. We have some red there. So let's throw on our buy sell signal. It did have a sell signal on the weekly. And as you can see, sometimes we can move down a fib level. So maybe, well, it's kind of bouncing hard off that 20 MA. You can see we only wick to it, but the body closed above it. So maybe we're going to get a bounce here around this range and move back up. I would wait for a weekly buy signal to confirm, but we are maybe possibly forming a base. Meta's just shooting up. Some good accumulation in here and just shot up. So Meta's looking very strong. And then lastly, Tesla. Now, you guys probably heard me talk about before how out of all the Mag 7 stocks, Tesla's the one I feel least strong about because it's a car company, EVs. The overall sentiment seems to be trending downwards. Now, maybe that's going to create some good opportunities to buy. However, the thing that always gets to me, and this is a bias I am well aware of, is that Tesla has a market cap around 15 times higher than Ford and GM and half the amount of revenue. So the thing that does go Tesla's way that they are pretty good at, they have a great balance sheet with a lot of extra cash on hand. So Tesla, even if there was a big recession, they're a company that could survive. Other car companies like Rivian, not doing so well. Could Tesla be at a possible good, decent range to buy? Well, here you're seeing we have a buy signal on the weekly. So there you go. If you like Tesla, you believe in it, here's your Tesla hopium. Now, on the monthly, this is still playing out. So maybe you're going to wait for confirmation on the monthly. However, if you're trying to front run that and you're like, well, we have confirmation on the weekly and the monthly may turn green and give me a buy signal soon, sure, you could do that. So Tesla here, we haven't been at these prices since May of 23. So it's been about a year. And as you can see here, it got down to that 100 level, big psychological level that it bounced off of. If we zoom way out with Tesla, as you can see here, we have this sort of giant wedge trend pattern. Well, kind of. Yeah, look at that. That kind of works out, doesn't it? Huh. I'm just looking at that for the first time. So as Tesla gets coiled up in here by, what does the date say at the bottom? June of this year, maybe Tesla's going to make a big move as it gets coiled up in here, one way or the other. So when this does happen, big moves either way can happen. I'd be interested to see which way it goes. Maybe it goes up and Tesla starts another strong run. We'll see, but just something to keep an eye on there. And, oh yeah, I wanted to show you Rivian. Rivian, man, that's one that's been struggling quite a bit, at least balance sheet wise. Now, me personally, I like the look of Rivian trucks more than the Tesla Cybertruck. You know, Tesla's been around for a while, but some of the things I've been reading is that Rivian might not be a company that survives. So do be careful if you do buy any dips here. Yeah, you might get some bigger value, but it, for those of you guys who don't know, if you buy stock in a company that gets bought out, not bankrupt, but bought out, what can either happen is you get your money from your shares back from where it got bought out, or your shares get rolled over. So let's say Ford bought out Rivian and they had a whole Rivian branch under the Ford umbrella. Then your Rivian stocks could then get rolled into Ford stocks. So that can happen as well too. Anyways, I'm feeling my voice going. I promise I'm feeling better. I hope you guys enjoyed the video. Do we have any important earnings next week? Let's take a look. So here is next Monday. Some pharmaceuticals and C Limited. That's the largest cap one for that day. Let's see. Tuesday, CrowdStrike Holdings. Okay. Target. I'll be interested to look at Target next week. JD.com. Sometimes I still can't believe how big a market cap that one is. And if there's ever any stocks or cryptos you want me to take a look at, just let me know. But again, I try to simplify this for you guys so you can open up TradingView and do this yourself. And my goal is to help you look for times and ways that you can increase the value of your investments if you are investing on your own. Costco, great stock. That's a strong one to buy any dips for. They'll probably be around forever. And then yeah, so Costco, that's a big stock next week. Anyways, remember guys, none of this financial advice. I'm just trying to use my knowledge, experience, wisdom from the field of psychology that I work in. I've consulted a lot, and I use all that knowledge to help myself with investments, and have been able to make good money just in the simplest way. If you get excited about when your stock has lows, you've done your research, it's below the 200-week moving average, then you can be opportunistic and buy the dips. It's not so hard to buy near bottoms as many people say. Selling the tops to me is harder. That's why I like to hold and just take profits way down the road. But yeah, I think stocks and how we buy in, it doesn't have to be as complicated. So anyways, hope you guys enjoyed. Hope you have a wonderful weekend. Take care. Bye-bye.